Hey, good morning, gang. So exciting morning, right? This morning, about half hour before that CPI report, futures were kind of either rolling over red or looking flat. All of a sudden, we got that core price, consumer price index, and guess what? It was a good number, right? They're expecting zero point 0.4, and they got it, and that's good. Inflation is a double-edged sword, guys. And what I mean by that is, one, if you're going to have good growth, you're going to have inflation, right? Things get more expensive as you grow. Um, the other side of that is, if you're going to have growth, you have to have some inflation, right? So you see that double-edged sword there. Now, the market wants to see inflation because that encourages growth, but the market doesn't want to see too much inflation. I've talked about it before, right? A couple of weeks ago when the market sold off because that rate move on the 10-year. It wasn't so much the rate move itself; it was the parabolic nature of it. You want to see inflation move in line with your growth, and that's what this month showed. But guys, and this is why I talk to you guys so much about it, how we're option traders, but we do build a big part of a good part of our portfolio into what a lot of people call them value stocks, but they're stocks with great balance sheets, weather the test of time, and they pay a good dividend. And that's what you want to have in times of the risk on trade comes off the board. So what you want to keep an eye on is, here's the conundrum to this, the asterisk to this CPI number this morning. What it is right now you had your year over year, and that was in line too. That was comparing February of 2020 to February of 2021. Now, the next one, remember, you're comparing in this one, you're comparing this February, which was part of a reopening economy showing growth, right? Showing progress, comparing it to a fully open economy a year ago, right? February. But what happened in March? Everything shut down. Now, going into the next report, next month's March report, right? You're comparing March's inflation number to March of a closed economy. Now it gets a little dicey. So this number is good, and we'll keep the risk on trade for right now. We've been talking about it, right? We're short the VIX, and that one's about to go into the money. We went long on Ollie. That one we're up over 100% already. And we had a flyer in Apple too, and that short in Coke going out to April. The short in Coke, okay, guys, we put that there before earnings, and the reason we did that was a strategy. We knew earnings could have went either way on Coke, but we knew if we carried it out to April, March is your first month that'll match that March of 2020, right? As far as inflation and things like that. So we felt like that was a good trade. We didn't wait. We could have waited and got the options cheaper after the earnings because it pushed up to that 50-51 range. But the strategy behind it was, just in case there's a bad report, even if it's good, we'll weather the storm as long as the chart doesn't blow up on us or anything like that. It's stuck at that 50-51, and we can live with that for a couple weeks, especially while we're cashing out 100 percenters. But look, guys, trade smart, especially on your stocks. Be smart about it. Build your portfolios smart. And when I say that, what I mean is make sure you've got some good stocks in there along with your higher risk plays like your options. It looks like the risk on trades back on the table, guys. So we just do a quick report this morning. Now, don't forget, go check the stock of the week from yesterday. We do that every Tuesday. That's the third week in a row we're doing it, right? The first week we did CCI Crown, which is a 5G, great dividend, great balance sheet. Also, too, it's available on your brokerages like your Schwab with the slice trade, where you don't have to buy a whole $150 share if you've got a smaller portfolio. Every journey starts with the first step. Don't ever feel like, I can only buy $50 of this stock and it's a $200 stock. It starts with that first step, and you start compounding immediately, right? And that's the trick to it. The sooner you start compounding, the sooner you start getting towards being the next Warren Buffett. But then the next one we gave you was ET, which has been doing real well. That's an oil play, energy play. Yesterday we gave you Apple. Apple, why not have the most profitable company in the world in your portfolio? That pays a great dividend, and that's proven over decades that it weathers the test of time, right? And so those are three ideas, and next week we'll have another one. But for today, today the market looks green. Let's go take a look at futures and stuff together before I let you guys go for your Wednesday. It's hump day, so take it easy today, guys. Don't stress. Should never be stressing in your trading anyways. There's CNBC. So you can see futures are up about 176 on the Dow, about 24 on the S&P, and about 171 on the NASDAQ. So it's coming out of that correction territory really strong. Apple was red before that report, and it went green in pre-market. And so did a lot of stocks, right? It looks like the Cathie Wood trade is back on the board, right? ARK Investing. For you guys that follow that, if you guys that want an easy way to play the Cathie Wood thing, because a lot of people ask me this, is how can I get involved with this woman? She has an ETF, ARKK. Go take a look at it if you're interested in that kind of stuff. Everything has an ETF now, guys. Social media has an ETF. You know what I mean? And let me talk real quick about ETFs now that we've looked at the numbers. ETFs, for any investor, no matter how experienced, no matter how talented you are as an investor or a trader, ETFs make sense. And the reason they make sense is, think about it, especially for a new trader, new investor. You see something's going to happen in retail, right? Oh man, the economy's reopening. Everybody's going to be spending their money, $1,400 checks, blah, blah, blah. I want to get into some retail. Then you look in the retail sector and there's 85 different stocks. Now, are you going to sit there and go through 85 charts? Are you going to go through 85 business models? Are you going to go through? No, go with the ETF, XRT on retail, right? And you see it, XRT is pushing $90, man. That's crazy high for XRT. But it's a great way to get involved. Now, the thing about ETFs, guys, is always check the fees in the ETF, because that'll affect your profitability, especially if you're buying it for your portfolio. If you're trading the options, you don't care. You're just worried about, is it going to go up? Is it going to go down? And how far, right? But if you're going to, if 2 months ago, if you had said, hey, I think retail is going to start exploding here, and you put a couple shares of XRT in your portfolio, guess what? You're doing real well. And that's a great, great advantage, especially to somebody like you and I that doesn't have 80 analysts looking over every stock in a sector like Goldman Sachs. That's how you bring you make the table even. Sorry, it's Wednesday, guys. But you guys, keep an eye on inflation. Like I said, with the ETFs, if that's an easy, and it's a smart way to play. Think about it like this. You're sitting in the market. You don't have time to really invest or research and stuff like that. You end up on a Reddit board, StockTwits. You don't know these people. You know what I mean? You're going to take financial advice from them. You know what I mean? Hell, don't even listen to me. You don't know who I am. But you go to those ETFs, guys. It's the easy way to do it. Like I said, for a new investor, it's very confusing out there. You sit there in December when the markets were at their highs and everybody on CNBC is pounding their desk. Everything's still cheap. It's different this time. Then you fast forward to the end of February, the early March, and guess what? The NASDAQ's in correction territory. Tesla they told you was cheap at 900, you can buy it for $600 now. So it's very easy to, as a new trader, a new investor, a new wealth builder, to get caught up in that BS, and use those ETFs to your advantage and use your common sense. You know what I mean? Most of investing is just common sense. You know what I mean? The economy was closed for a year. All of a sudden, we're opening it. So guess what? People can travel, people can fly around, people can drive around and stuff like that. Common sense tells you what's going to go up. Gas, energy, right? Everybody needs gas for planes. Everybody needs, all this stuff. But and the ETF gives you a great way to trade that, right? OIH if you want to play gas, things like that. But let's close this up, guys. Just keep an eye on that next inflation, that CPI number. And don't forget, tomorrow we have our unemployment numbers, right? We have our continuing in our initial claims, and we'll see how that shakes out. All right, guys. We're going to get the federal debt number here, too, in a few minutes, I think. God help us. Add 1.9 trillion to that. Anyways, guys, you have a great Wednesday. I'll see you guys tomorrow morning. Trade safe, trade smart, but be aware of that. Okay, guys, make sure you got a little protection in your portfolios. All right. I'll talk to you guys tomorrow.